Welcome back to Squawk Box. An explosive news story shedding light on the taxes paid by the ultra-wealthy. ProPublica publishing a story based on what they are calling never-before-seen data obtained from the IRS. It includes information on American business titans like Warren Buffett, Bill Gates, and Mark Zuckerberg. The piece titled "The Secret IRS Files Troves of Never-Before-Seen Records Reveal How the Wealthiest Avoid Income Tax." It went live yesterday. There's a huge debate about it, and we should note that ProPublica says it is not disclosing how it obtained that tax information and says they went to considerable lengths to confirm the information sent is accurate. NBC News, we should say, has not independently verified the information. We should also say ProPublica does not allege any of the people in the story did anything illegal. The IRS, though, has opened an investigation into how that data was leaked. And joining us right now is one of the authors behind that explosive report, ProPublica senior reporter and editor, Jesse Eisinger. Jesse, it's great to see you this morning. It is the story that everybody is talking about, and we want to talk about it with you on so many different levels. I want to start the conversation, if we could, just going into some of the detail about some of the individuals and what you reported. People like Jeff Bezos claiming a $4,000 tax credit for his children in 2011 after reporting that he had no income that year. Warren Buffett paid, you report, under $24 million in taxes between 2014 and 2018. Mike Bloomberg paying $70 million in tax in 2018, despite, as you said, reporting a $1.9 billion in net income. Carl Icahn and Elon Musk clearly taking out loans against stock collateral. Again, that prevents creating additional income. George Soros had no federal income. So there's for a couple of years between 2016 and 2018. So there's a lot that is revelatory in this. My question to you is, how do you think that they're doing it? And one of the things that you do in the story is compare how much money they paid in taxes to their overall wealth or their gain in wealth during those periods. And to me, that piece of it, I want to get to in a second, but I want to just spend some time thinking about how and why and whether you think it's legal what they're doing.
Sure. Thanks for having me, Andrew. Always great to be back on Squawk Box. So let's just situate this for a second. If you want to talk about effective tax rates, the tax rates on billionaires, we have a companion piece to the main piece. It shows that billionaires pay effective tax rates that are lower not only than the 0.001%, but also lower than someone making $45,000 a year, about 15%, 16% in the last, 2014 to 2018. That's effective tax rates on income. We don't think that's the most meaningful way to talk about the ultra wealthy, because they're really not in the tax system. I and many of the viewers, well, maybe not many of the viewers on CNBC, maybe not you, but most of us are in the tax system, and we get salaries and we get taxes extracted from our salary. The ultra wealthy are completely outside of the system, and their wealth and all of the power and all of the means that their wealth confers is completely, almost entirely, outside of the system. And the question is whether that system is working.
So the question, though, that I'd ask you is, to me, there's the issue of realized gains and unrealized gains. And the thing that you do that is interesting, though there's been a number of critics of it, is the idea of comparing it to unrealized gains. Steve Ratner, who I should say oversees and represents the money of Michael Bloomberg, who's mentioned in the piece, called the piece financial gibberish.
Steve Ratner. But that's, the funny thing is that, first of all, there's a whole economic concept about unrealized gains being income. It goes back to the 1920s. But irrespective of that, what's happening is with the super wealthy is that their wealth is growing, and that is allowing them to have the means to do an enormous amount of spending and keep control of the company. So how do they spend if they don't realize? Well, they borrow against the wealth. So Elon Musk pledges his shares and borrows billions, tens of billions of dollars. Carl Icahn borrows billions of dollars. Larry Ellison had a $10 billion credit line. So what's happening when they borrow is that they're not selling, they're not taking gains, they're not paying any taxes, and they're living lavishly. In the case of Carl Icahn, we're all subsidizing the leverage that he uses to boost his returns. So is that a system that's effective? Is that a system that's fair? Are they paying their fair share? We think that this is the right measure. I don't think it's gibberish at all. I don't think Haig Simons in the 1920s thought it was gibberish to measure income this way. It's a very carefully done analysis that
look, I agree with you in that there's a very fair question to be asked about whether we should be incentivizing effectively the interest expense of loans to be used in this way at this level. I've asked questions about when it comes to philanthropy at that level, what the kinds of deductions that should turn out to be, and whether and how you can deal with the step up in basis issue and eliminating that at death so that you can capture all of this. So we're not in disagreement about. There are elements of this, I think, that you and I are completely in agreement about. Let me ask you a very different question, though, which is there's a big question right now about this data itself, which is to say that historically private actors, private citizens, their tax information has been kept private. That's different than elected officials or even private citizens that are running for elected office. Do you think that data should be private?
Well, we don't think that some of the data should be private. We published it. We are being careful, responsible stewards of this information, and we're only putting it through a prism of what is in the public interest. And we think it is in the public interest to know that Jeff Bezos, the world's richest person, paid zero in income tax in 2 recent years, that Michael Bloomberg paid zero, Carl Icahn paid zero, Elon Musk in 2018, zero taxes. I defy anyone, one, to say, like, this is old news and we're all jaded and the rich can avoid taxes. I think no one would have thought that this was the case until yesterday when we published it. Maybe, that real estate moguls like Donald Trump or Jared Kushner might pay zero, but not these guys. So we think it's in the public interest. We were very careful. We verified all the information. The most important aspect of this to us is the information comes and we put it through a prism. Is it verified? Is it true? Is it newsworthy? And we thought it passed that. Every source has bias. I mean, I'm familiar with cable stations that have money managers on who talk about stocks that they own. And I think that they can have valid points. Every source in every interaction for every journalist has an agenda, has a bias. We put it all through the prism of whether it's true and whether it's newsworthy.
Shepard Smith here. Thanks for watching CNBC on YouTube.